Hi, I'm An Ong, and I will talk about government's tax expansion on enhancing company continuity and attracting foreign company.
Hi, my name is Si Xiao Tong, and I would like to talk about tax incentives in the Malaysian budget 2021.
Hi, my name is Burhanuddin and I'm going to talk about corporate tax in the Malaysian budget 2021.
In order to improve business continuity, the Malaysian government has put forward more recommendations in 2021 budget to help the economy recover. Equity crowdfunding investment can enjoy a 50% income tax allowance, capture a 10% of total income of Rm50,000 effective from 2021 to 2023. The Bencana Incentive Plan grants a special income tax rate for 50% for 5 years to non-resident individuals who hold key positions in companies relocating in Malaysia. To attract foreign manufacturing, the government has provided a stimulus plan. Bencana has for December 31st, 2021, a series of incentives has been provided to the foreign manufacturer company willing to move to Malaysia. For companies that invest between 300 million to 500 million ringgit in fixed assets, the 10 years tax rate is zero. For companies that invest more than 50,000 million ringgit in fixed assets, the next 15-year tax rate is zero. Companies that have operations in Malaysia and relocate their overseas factory to the country can enjoy 100% investment tax relief.
In the Malaysian budget 2021, there are some tax incentives for the company. The government has distribution and investment incentives for the pharmaceutical manufacturers. This is to urge manufacturers of pharmaceutical products such as vaccine to invest in Malaysia. The incentives include an income tax rate of 0% up to 10% for the first 10 years of operation and will have a 10% tax rate for the next 10 years. Applying for this incentive must be received by MIDA within the period from 7 November 2020 to 31 December 2022. Next, the review of tax incentive or principal have also been highlighted in the tax incentive. The government has extended the period of application for current incentive for 2 more years, which is until 31 December 2022. The government also wants to relax the base stat of the number of high-worth work, yearly working consumption, and the quantity of key posts for renewal of the tax incentive for the following 5 years.
To begin with, I am going to talk about income tax exemptions on sustainable and responsible investments Sukuk grant. A Sukuk is an Islamic financial certificate. It is like a bond. So a green SRI Sukuk grant is used to fund environmentally friendly projects. So companies that are into environmentally friendly projects and use the green SRI Sukuk grant will get an extension of 5 more years of tax exemption. But to get the SRI Sukuk, the company must meet the ASEAN Green and Social and Sustainability Bond standards that are set by Securities Commission. This tax incentive is only valid for companies that will apply from 1st January 2021 until 31st December 2025. The reason for this tax exemption is to promote green SRI Sukuk and to encourage more companies to apply for green, sustainable and responsible investments Sukuk. The second part of the corporate tax talks about the extension on the period of double deduction for employing a certain category of people. The certain category of people includes senior citizens, people who have committed crimes in the past, people let out of prison on parole, supervised persons, and people who used to be drug addicts. Double deduction is given on the salary of the people mentioned above. This double deduction already exists, but an extension of another 5 years has been added. This shall take effect from 2021 to 2025. The reason this extension has been proposed is because the government wants to encourage more employers to hire people from the aforementioned category of persons. Under corporate tax, there is a tax incentive for export of private healthcare services. Until now, there is a tax incentive for private healthcare companies whose income comes from exporting the service to foreign patients either in Malaysia or from Malaysia. The tax incentive has been extended for another 2 more years, which is from 2021 to 2022. So, to promote export services of healthcare, the government is providing a tax exemption of 100% of qualifying capital expenditure to be set off against 70% of the statutory income.